keeps blocking black wealth? We digging deep to free ourselves.
Back to Who Keeps Blocking Black Wealth. I'm Dana. Today we're talking about financial myths, the stories that sound true, feel comforting, and quietly turn into barriers. Let's unmask it.
And I'm Harold, because some things are not holding you back, they're just unexamined.
Before we get into today's topic, let's talk about what changed this week and why it matters. One of the biggest stories this week involved major insurance companies warning about rising long-term care costs and the growing financial strain of America's aging population. Now most people hear long-term care industry and immediately think, that ain't got nothing to do with me.
Exactly. Folks trying to survive this month. They're not sitting around worried about nursing homes and actuarial tables.
And that right there is the disconnect, because long-term care isn't just about elderly people. It's about retirement systems, healthcare costs, family caregiving, insurance pricing, government spending, and generational wealth transfer.
Meaning if grandma need care and nobody planned for it, the entire family finances can get dragged into it.
Exactly. And historically, Black families are often more likely to become unpaid caregivers while simultaneously having fewer financial reserves, which means less retirement stability, more financial stress, and fewer opportunities to preserve wealth across generations. In my case, my dad had Parkinson's and acted as caregiver to my mom, who had vascular dementia, up until the day I found my dad curled up in fetal position on the floor, unable to move or communicate, and my mom cooking an invisible dinner on the gas stove, flames up high, skillet empty. And even though she had basically brainwashed my nephew from birth that he would eventually become their caregiver, he had a newborn child and was living in another state. In essence, things happen.
Life happens.
And that's why retirement planning cannot just mean, hopefully my family figure it out. Because eventually caregiving becomes a financial issue, a healthcare issue, an emotional issue, and a lifestyle issue.
See, that's the part folks avoid talking about.
Exactly. And this is also why insurance matters. Insurance is simply a mechanism for transferring the financial risk of an event occurring onto a company. And many long-term care policies even contain return of premium provisions, meaning, depending on the structure, money paid into the policy may still return to beneficiaries if the coverage is never fully utilized.
So once again, the issue ain't just, do I need insurance? It's, what problem am I trying to prevent from destroying my family later?
Now you got it. And there's a civic layer people miss too, because long-term care connects directly to Medicaid funding, state budgets, healthcare policy, insurance regulation, and aging infrastructure, meaning public policy decisions eventually determine who receives care, how expensive care becomes, and who financially absorbs the burden.
So once again, people ignore the system until the system show up at Thanksgiving needing a bedroom and blood pressure medication.
You know it. And this is why retirement planning cannot simply mean,
hopefully, Social Security enough.
Right, Harold, because retirement planning is really income planning, healthcare planning, estate planning, and dignity planning.
So the issue ain't just money, it's preparation.
Precisely. And when you really think about that, Scripture has already been speaking to this. In Proverbs chapter 21, verse 5, it says, "The thoughts of the diligent tend only to plenteousness, but of everyone that is hasty only to want." That scripture is talking about intentional planning, not panic, not reaction, not survival mode, planning.
Now let me reiterate what I said last show Ecclesiastes says, "To everything there is a season, and a time to every purpose under the heaven." Most people hear that and think, when you're in your current stage, focus on that. The future will take care of itself. But eventually your body change, your health change, your energy change, your ability to work change. And folks really do act like they're gonna be 35 forever.
Then let me reiterate as well, though I detest redundancy, this bears repeating. Jesus says in Luke chapter 14, "For which of you, intending to build a tower, sitteth not down first and counteth the cost, whether he have sufficient to finish it?" That's retirement planning, sitting down, counting the cost, and defining the future before it arrives.
So retirement ain't really about old age. It's about whether future you gone have choices.
Yes, future you. And that's why last episode I asked you to write down what your retirement looks like. It's also what today's conversation is really about.
All right, before Dana turns this into a full financial revival, let's take a coffee break.
And honestly, if you're trying to keep up with markets, policy, and all the ways money moves, you need to stay sharp. That's why I like strong coffee. It's not just coffee for a quick jolt, and it's built to help you stay focused and steady without feeling all over the place later.
Which is useful, because this economy already got enough people feeling jittery.
Exactly. So if you want to try it for yourself, use code WKBBW. That's code WKBBW. Same coffee, less money. Also,
Stay awake, stay aware. And now let's get back to it.
as I was saying before the break, last episode, I asked you to define what retirement looked like for you. I asked you to write it down because writing something down makes it real. It becomes something you can actually visualize. And I know some listeners were probably shocked, maybe even a little discouraged when they compare what they want retirement to look like versus the cold reality of where things stand today.
Because some folks realized my retirement plan currently looked like prayer, overtime, and a broken alternator.
But let me encourage you, all is not lost because retirement planning is not about becoming rich overnight. It is about making wiser decisions over time. And one of the biggest mistakes people make is assuming retirement planning only means saving money. Real retirement planning also includes healthcare planning, risk management, caregiving realities, and protecting your family from financial devastation later. Which brings us to something a whole lot of families quietly assume. Somebody in the family will take care of me. And emotionally, that sounds loving, but life does not always cooperate with our assumptions.
Especially nowadays. Everybody already juggling kids, jobs, debt, mental stress, and trying not to lose their mind.
And this is where my family story got even more complicated. My sister took my mom in. That was love. That was family trying to do what families do. But my mom disabled the alarm system and escaped. At that point, the conversation changed because love was still present, but safety became the issue. And eventually to the nursing home she went.
See, that is the part folks do not picture when they say, family gonna take care of me. They imagine somebody making soup and fluffing pillows. They do not imagine alarms being disabled, people wandering, everybody scared, and nobody sleeping.
And then the house had to be sold to help cover facility costs for both my mom and my dad.
That is the part people miss when they assume caregiving is only emotional. It becomes financial quick.
Assets that a family thought might remain in the family can become care funding. Property can become liquidity. And the choices become harder when the planning was not maintained ahead of the crisis.
So the family home went from legacy asset to care payment.
That is exactly what happened in my case. And even after the money starts moving, quality of care is not always even. Some facilities are better than others. Some staff members care deeply. Some systems are overwhelmed. Some situations become unacceptable. And now we are suing the facility connected to my father's care.
That right there is heavy, because now we are not just talking about money. We are talking about dignity. We are talking about safety. We are talking about who is watching the people who can no longer fully advocate for themselves.
That is why this conversation matters. And after all of that, I paid for my dad's funeral. So when I talk about risk management, I am not speaking theoretically. I am talking about the way one family can get hit from every direction: caregiving, facility costs, asset liquidation, quality of care concerns, legal issues, and final expenses.
But people still think insurance is just about dying.
That is the mistake, because this episode is not just about mortality, it is about morbidity. Mortality is the risk of death. Morbidity is the risk of illness, disability, cognitive decline, physical decline, and needing help while you are still alive. And in many families, morbidity can create a larger financial strain than mortality.
Because a funeral might be one big bill, but years of care, that can drain the whole structure.
And here's the part that still bothers me. My mom had a policy I sold her when I was a licensed advisor, and I did not know she chose to let it lapse. That was totally on me. Not because I caused her illness, not because I could control every decision, but because I understood the purpose of that coverage, and I still did not know it was gone until it mattered.
That is real accountability.
And I am sharing that because people need to understand something. Life happens. Even financially educated families can experience missed planning, missed communication, lapsed policies, unexpected illness, caregiver exhaustion, and emotional decision making. That is why retirement planning cannot simply mean how much money can I accumulate.
It also has to ask, what risks could destroy everything I built?
Most people think insurance is an investment conversation, but insurance is really a risk management conversation. Insurance is a mechanism for transferring the financial risk of a catastrophic event onto a company.
That event might be death.
But it might also be disability, chronic illness, long-term care, cognitive decline, or the need for in-home or facility-based assistance.
Meaning you are not buying insurance hoping something bad happens. You are buying it because eventually life be lifing.
Right? And when we talk about long-term care, there is not only one way to manage the risk. Some families self-insure. That means they intentionally build enough assets, income, and liquidity to absorb potential care costs themselves. But self-insuring requires substantial resources, discipline, and a realistic understanding of what care can cost.
Because memory care and nursing homes ain't charging neighborhood favor prices.
They are not. Other families transfer part of the risk through insurance. That might include traditional long-term care insurance. It might include hybrid life insurance with long-term care benefits. It might include certain annuity structures. It might include life insurance products with chronic illness or long-term care riders. The point is not that every person needs the exact same product. The point is that every person needs to evaluate the risk. Some policies help cover home health care. Some help cover assisted living. Some help cover memory care. Some help cover nursing facility care. Some have elimination periods, which means you may have to cover costs for a certain period before benefits begin. Some have inflation riders designed to help benefits keep pace with rising care costs. Some hybrid policies include return of premium or residual death benefit features, depending on the structure. That means if the long-term care benefit is never fully used, there may still be value returned to beneficiaries.
So when folks say insurance is just money gone, They may not even understand what kind of policy they are looking at.
That is the point. You cannot evaluate the value of a risk management tool if you do not understand the risk it is designed to manage. Long-term care planning is not only about whether you can afford premiums, it is also about whether your family can afford the crisis without them.
Now, that is a different question.
It is. And then there is Medicaid. For many families, Medicaid becomes the payer of last resort for long-term care. But Medicaid is not simply a magic backup plan. It comes with eligibility rules, asset rules, spend down considerations, state level differences, and often limited choices.
So waiting until everything falls apart can mean losing options.
That is the risk. Planning earlier gives you more choices. Waiting until crisis often means accepting whatever options remain. And that is why this is not just an insurance episode. It is a retirement risk management episode because retirement planning must consider income, health care, insurance, estate planning, housing, liquidity, family capacity, and the possibility that you may live a long life with medical complications.
Because everybody plans to live long, but not everybody plans for what living long can cost.
Here's the real aha moment. Most people financially prepare for mortality, funerals, burial policies, life insurance, death benefits, but far fewer people prepare for morbidity.
Because a funeral might cost thousands, but years of care, that can drain an entire family financially.
And that is why real retirement planning is not just about preparing for death. It is preparing for the possibility of a long life that becomes medically complicated.
So stop viewing insurance only as something that pays after death.
Start viewing insurance as part of a broader risk management strategy, a strategy that protects choices, protects dignity, protects assets, and protects the people you love from being forced into crisis decisions.
Because hoping your family figure it out later is not a plan. That is just passing the stress forward.
And stewardship means asking hard questions before life forces the answers. So this week, I want you to have the uncomfortable conversation. Start with this. What type of care would I realistically want to receive if my health changed? Would I want in-home care? Would I expect family caregiving? Would assisted living be acceptable? Would memory care be necessary if cognition became an issue? Would I be comfortable in a nursing facility if that became the safest option? Then ask, what resources have I actually earmarked for those potential realities? And I do not just mean money. I mean human resources too. Who realistically has the time, the housing, the emotional capacity, the medical ability, and the long-term endurance to help?
Because love and availability are not always the same thing.
Then ask one more honest question. What can I afford to pay now in order to give my family more peace of mind later? That may involve insurance. It may involve emergency reserves. It may involve estate planning. It may involve healthcare directives. It may involve long-term care planning with a qualified professional. But whatever it involves, do not leave the whole issue sitting in the lap of whoever loves you most. Because stewardship is not just building wealth, it is reducing unnecessary chaos for the people you love.
Because life be lifing whether you planned for it or not.
And that is how you stop wealth from being blocked. So here's the truth. Wealth inequality isn't always about effort, it's about structure. And once you understand the structure, you stop being confused by the outcome.
And start moving different.
Exactly.
After a conversation like that, family, take a breath.
This is your reminder that rest is not laziness.
It is recovery.
That's why this nap time moment is brought to you by Cozy Earth Sheets. Because after a long day like this, if you're going to rest, rest well. These sheets are made from viscose from bamboo, super soft, breathable, and honestly, once you lay down, you're not getting back up. If you're going to recharge, you might as well do it right. go to cozyearth.com. Use code WKBBW. Get 40% off. Wrap yourself in luxury.
Yeah, I'm logging off early tonight.
It's soft sheets, better sleep, and a reminder that peace matters too.
I support anything that involve a nap.
We know Harold. All right, family, that's another episode of Who Keeps Blocking Black Wealth. If this blessed you, challenged you, or cracked you up, hit like, subscribe, and share it with somebody who needs a financial breakthrough and a good laugh today. Remember, we do not chase money. We chase wisdom. We chase stewardship. And God adds the increase. This show exists to shine a light on the knowledge our community has believed was hidden so we can understand it and use it to our advantage.
Because once you understand the rules, you stop guessing.
Pray, plan, prosper on purpose. Love y'all. See you next time. Harold, tell the people bye.
Bye. Send gas money.
Lord, help us.
Who keeps blocking black wealth? We digging deep to free ourselves. Faith, money, truth on the shelf. Let's talk about it, talk about it.
Who keeps blocking black wealth?
Not me, not today. Check your credit and pray.